Thank you for waiting. We will start the Investor Day of Kioxia Holdings Corporation. I'm today's facilitator, Fujikawa, from the Corporate Communication Division. With me here are President and Chief Executive Officer, Hiroo Ota, Executive Vice President and Executive Officer, Chief Financial Officer, Yoshihiko Kawamura, Managing Executive Officer, Chief Strategy Officer, Junichiro Yaguchi, Managing Executive Officer, Vice President of SSD Division, Masashi Yokotsuka, Executive Officer, Vice President of Memory Division, Atsushi Inoue. These are 5 speakers for you today. Let me inform you on the process of today's call. After outlining the disclaimer, the speakers will spend 1 hour to cover the agenda in front of you on the screen. The material is available on the Investor Relations site of our corporate website. After that, we are going to have the Q&A. The entire session will end at 6 p.m., which is subject to change depending on the proceedings. And please be advised that today's session will be recorded for on-demand viewing later. We would like to start with a disclaimer. Forward-looking statements are prepared based upon our expectations and projections in light of the information currently available to us, which involve various risks and uncertainties. Such risks and uncertainties may cause our actual results to be materially different from any future results expressed or implied by these forward-looking statements. We undertake no obligation to update any forward-looking statement included in the material. For more of the disclaimer, please refer to this slide on the screen. Now, let us hand over to Mr. Ota.
I am Hiroo Ota, President and CEO. Thank you for taking the time to join our Investor Day today. The rapid proliferation of generative AI is bringing a seismic shift to our industry. Today, I would like to outline our strategy for how we, as a provider of the flash memory that underpins the data infrastructure of the AI era, will meet market demands and achieve sustainable growth throughout the transformative period. I'll be explaining the following points. In last June's corporate strategy meeting, we shared our projection that flash memory would evolve from being a simple data repository into a critical component that dictates the performance of the entire AI systems. Over the past year, this projection has materialized as tangible demand. We interpret our current share price as a clear sign of the capital market's recognition and trust in our strategy to effectively capture this AI-driven demand. This growth is underpinned by rising data center investments since 2024. Most notably, as the use of generative AI started to shift from training to inference in the second half of 2025, the vital role of storage has been strongly reaffirmed. Consequently, demand for AI-focused data centers is expanding robustly, and the flash memory market is thriving. We anticipate this favorable environment will persist through 2027. Starting from the second half of 2025, the AI landscape is transitioning from a training phase focused on building large language models to an inference phase where these models are implemented in real-world applications. Furthermore, AI is evolving from a mere tool used as humans into autonomous agents, exemplified by agentic AI and physical AI that can autonomously reference data and achieve specific objectives. We anticipate this trend will trigger an explosion in the volume of inference processing. In this inference phase, calculation speed, data processing capacity, and total cost of ownership, TCO, including power consumption, become paramount. The key is how to execute these massive inference tasks both economically and efficiently. To that end, technologies such as retrieval augmented generation, RAG, which leverages external knowledge, and KV caching, which reuses previous inference results, are advancing at a rapid pace. However, it will be difficult for high bandwidth memory alone to meet the massive memory demands generated by these advancements. This is especially true as AI applications expand into the edge domain, where local data processing is a prerequisite. Consequently, the importance of low-power, high-speed storage has never been greater. We believe flash memory is the only storage medium capable of meeting these diverse market demands and economically scaling inference systems from a total cost of ownership perspective. Driven by these trends, discussions involving the entire ecosystem are intensifying around the realization of next-generation AI native storage. At the heart of these discussions is our key partner, NVIDIA, who are proposing a vision of redefined storage, not as a mere storage device, but as an extended memory tier for GPUs. This vision is embodied in initiatives such as CMX, which utilizes SSDs as a memory tier to record previous calculation results for improved inference efficiency. Another example is NVIDIA Storage Next, where SSDs are used as extended memory in RAG servers that store external knowledge to enhance response accuracy. Furthermore, we anticipate an accelerating increase in the volume of generated results stored on storage servers. What these developments signify is that alongside GPUs and HBMs, storage has become a core component that determines the performance of AI systems. As specialists in flash memory and SSDs, we will actively propose a wide range of technologies and solutions for these initiatives, leading this AI paradigm shift together with our partners. To capture the opportunities brought about by these structural changes in the market, we plan to make a strategic shift in our business portfolio. First and foremost, we will focus on our data center and enterprise business. Over the medium to long term, we aim to raise this segment's share of our overall revenue to over 60%, while maintaining and enhancing our competitiveness in standardized products. We will expand our offerings of high value-added products exemplified by super high IOPS SSDs that directly help improve the efficiency of AI systems, thereby driving improved profitability. In our core smartphone and PC segments, we will maintain our revenue scale, positioning these as an unwavering foundation for our business. Building upon this solid base, we will expand our market development efforts, targeting the edge AI segment where we foresee significant growth. I am pleased to report that for the second consecutive year, we have achieved record highs in both revenue and operating profit. We expect to maintain this high level of profitability in fiscal 2026, and our Q1 guidance projects a OP margin of 74%. The repayment of our interest-bearing debt is progressing smoothly, and we anticipate achieving a net cash position by the end of the first quarter. In light of this improved financial health, we are actively considering shareholder returns for fiscal 2027. The funds generated will be allocated towards strategic investments for the future, alongside shareholder returns. First and foremost, as a provider of the flash memory and SSDs that form the backbone of AI infrastructure, we must resolutely ensure we continue to deliver optimal technologies and products to the market in a timely manner. We will advance the implementation of our technologies through partnerships with our customers. Simultaneously, as the procurement environment becomes increasingly uncertain, we will focus on building a resilient supply chain to ensure the reliable delivery of our products. Our second priority is the commercialization of our R&D achievements. As the research level, we have successfully demonstrated the operation of HCF memory as the next evolution beyond our vertically stacked BICS architecture, paving the way for the future advancement of 3D flash memory. We will continue to evaluate fundamental cell characteristics to verify its feasibility. Furthermore, at IEDM 2024, we announced the development of Octram technology, utilizing vertical transistors made of oxide semiconductors. At last year's IEDM, we presented an evolution of this, a highly stackable oxide semiconductor channel transistor technology in a 3D architecture. We are committed to driving this development forward, exploring commercialization while assessing market viability and mass production readiness. Moreover, as AI evolves, the required memory solutions must also evolve. We will explore strategic acquisitions to broaden our capabilities into domains that extend beyond flash memory alone. People are the foundation of this growth. We will train highly skilled professionals to support the technological expertise required to succeed in intense global competition and create an environment where diverse talent can thrive. Also, we are accelerating digital transformation and the use of AI across our entire organization. Just as we enable AI infrastructure for our customers, we will lead by example by integrating AI deeply into our own operations to drive efficiency and innovation. Moving forward, we will bring our technological expertise to the forefront. By co-creating the next generation of AI capabilities alongside with our customers, we will expand our role as a vital provider of data infrastructure. We are not merely a component supplier. At the core of AI infrastructure, we are driving the next technological paradigm shift. We remain committed to meeting market demands and enhancing our corporate value. We look forward to sharing our future success with you as we continue to grow. Thank you very much for your time and attention today.
I am Junichiro Yaguchi, Chief Strategy Officer. I'm going to cover the outlook for the flash memory market, our resource allocation, and our investment strategy. First, let me outline our big growth outlook for the NAND flash memory market. CAGR through 2028 is projected to be slightly over 20%. Notably, data center demand is expected to grow significantly by 46%, with increasing AI server capacity driving market expansion. Within this segment, inference AI applications will serve as a primary growth catalyst and are likely to achieve an estimated CAGR of 86%. On the other hand, near-term storage demand for smartphones and PCs is undergoing a minor adjustment phase, with some forecasts projecting a slight decline this year. Although the demand environment varies by application, we are focusing sharply on the expanding AI and data center SSD markets. To meet this increased demand and achieve sustainable growth, we will accelerate our capital expenditure and R&D. Next, let's look at the supply and demand balance and the size of the NAND market. The former is expected to remain tight throughout calendar year 2027, driven by strong demand for AI data centers and constraints on NAND supply. Furthermore, NAND prices are on an upward trend. Several research firms estimate that the revenue of this market will be approximately 4 times larger in 2026 compared to 2025, with this trend projected to continue into 2027. In response to the expansion of the NAND market driven by AI and data center demand, we currently plan our annual capital expenditure to average approximately 470 billion yen over the next 3 years. This represents an increase of roughly 60% compared to 2025. This figure includes not only investment in production equipment, but also in clean room interiors and infrastructure. It incorporates medium to long-term investments designed to secure upside flexibility by expanding our available space. Leveraging customer commitments, including LTAs, will establish the supply framework to support a stable demand. Furthermore, we'll continue to maintain higher capital efficiency than the industry average, executing disciplined investments. We are targeting an average annual reduction in front-end cost per gigabyte in the 10% range. Through the migration of BiCS Flash, we have factored in bit density improvements of 50% or more per each new generation. During transitions between product generations, we don't base our key performance indicators solely on the layer count. Rather, we plan to achieve competitive cost reductions by pursuing the optimal mix of 2D shrink and layer count. We will cover this point in further detail later by Mr. Inoue. Through efficient capital expenditure and by leveraging our world-leading economies of scale, we have maintained a lower cost per gigabyte than the industry average, and we intend to sustain this competitive advantage in the future. Research and development is a source of our competitive strength. Over the next 3 years, we plan to increase our R&D investment by 60% over 2025 levels, bringing it to approximately 230 billion yen annually. Furthermore, we are progressing development tailored to specific memory hierarchy in order to deliver the distinct performance characteristics demanded by AI and data centers. We are allocating R&D investment to the development of 10th and 11th generation BiCS Flash as next-generation products following 8th generation BiCS Flash. In SSDs, our key focus area, we are targeting investment sufficiently at areas that will help speed up launch of new storage architectures, including our super high IOPS SSD. Additionally, for new memory devices, we will accelerate development at our Frontier Technology R&D Institute to improve the characteristics of Octa-RAM devices and facilitate decision-making around commercialization of these. In addition, although not listed here, we are planning to establish the tentatively named Kioxia College at our Shin-Koyasu Technology Front Campus, our R&D hub. This initiative, which we plan to launch by the end of fiscal 2027, is part of our commitment to boosting the development and cultivation of our research and engineers. Thank you for your attention.
My name is Yokotsuka, Managing Executive Director and Vice President of the SSD Division. I will discuss our initiatives in the AI field in the context of our SSD business. We view the rapid advancement of generative AI and agentic AI as a critical growth opportunity, and we are boosting our development efforts across both our SSD product portfolio and our software solutions. Here's the agenda of my presentation. First, I will review our key achievements and performance from fiscal year 2025. Next, I will discuss the emerging challenges associated with AI inference systems as they become increasingly commercialized and widely adopted. Then I will highlight the new applications for SSDs that are being unlocked by these cutting-edge AI inference systems. Finally, I will introduce Kioxia's comprehensive SSD portfolio, which is designed to fully address and support all of these new applications. Looking back, fiscal 2025 was a year where we achieved significant progress in our generative AI systems businesses. We successfully capitalized on this wave of growth, with our products being adopted by a broad range of customers, primarily in the data center, enterprise, and PC segments. The first of these was our high-capacity SSD, the LC9. This offers an industry-leading capacity of 245 terabytes, and it is designed to meet the rapidly expanding demand for AI data storage. It has already completed evaluation and validation with key customers and is now being rolled out to the market. The second is our open software solution, Kioxia Isaac. As generative AI moves into practical application, the adoption of RAG is expanding rapidly. Previously, a major challenge was that vector databases, which are critical for response accuracy, were constrained by DRAM capacity and CPU performance limits. The software effectively utilizes SSDs and GPUs to significantly alleviate these constraints, enabling high-speed, cost-effective processing of vector data on a scale of billions. By integrating with Milvus, a leading open-source vector database, we enhance both the practicality and adoption of our technology. Additionally, we have leveraged the software library NVIDIA QVAS, which enables high-speed processing of vector databases through GPU acceleration. This collaboration allows us to construct databases with billions of vectors and achieve indexing speeds up to approximately 20 times faster than using only CPUs. Through these initiatives, we position Kioxia Isaac as a crucial technology that significantly improves the scalability and practicality of generative AI infrastructures. We are advancing integration with various ecosystems. Driven by these achievements, fiscal 2025 was a year of steady progress in our efforts to keep pace with the evolution of AI infrastructure, allowing us to build a solid foundation that will support our future growth. Next, regarding the emerging challenges of growing AI inference systems, this section outlines the system architecture of conventional inference AI and the challenges that are emerging as it evolves. Traditional inference AI systems primarily perform a simple process, executing a single inference in response to a user's prompt and returning an answer. Therefore, a configuration combining inference servers equipped with GPUs, basic RAG, and standard storage was sufficient. The volume of data handled and the frequency of access remain relatively limited, and the demands on storage performance are not particularly high, allowing for the use of HDDs for cold data. However, with the rapid evolution of AI, this premise is fundamentally changing. In the case of agentic AI, the system autonomously repeats inferences multiple times, advancing processes while continuously interacting with external tools and other AI models. Consequently, the system load increases exponentially. A critical bottleneck in this new paradigm is the KV cache. As inference becomes continuous and multi-stage, the context expands rapidly, making it impossible to hold the entire KV cache within the GPU memory alone. This leads to increased cache evictions and reloads, resulting in memory throughput and storage performance becoming the primary bottlenecks, impeding overall inference efficiency. Furthermore, regarding RAG, the expansion of data scale and the surge in access frequency make it difficult to manage with capacity-constrained DRAM or slow storage like HDDs. As you can see, the evolution of AI is significantly elevating the performance requirements of the entire system, necessitating advancements not only in computational power but also in storage capabilities. Next, regarding the new applications for SSDs unlocked by these cutting-edge AI inference systems. This section details how the latest AI server technologies are addressing these challenges. Currently, various solutions for inference AI are being proposed, notably by industry leaders like NVIDIA. The common denominator among all these approaches is the critically important role played by SSDs. The first point is addressing the lack of capacity of GPU memory, particularly HBM. In agentic AI, KV caches multiply rapidly and exceed the internal capacity of the GPU. To counter this, context memory storage, CMX technology, expands the cache onto high-speed SSDs to maintain inference efficiency. Furthermore, NVIDIA Storage Next advanced architecture and bypasses the CPU, enables GPUs to directly access SSDs, achieving an effective expansion of memory capacity. The second point is the evolution of RAG servers. While high-speed search is essential for handling large-scale, up-to-date data, DRAM capacity has traditionally been a limiting factor. Today, the utilization of a high-performance, high-capacity SSDs is successfully balancing scalability with cost efficiency. The third point is the transformation of storage servers. As data volumes surge, alongside the widespread adoption of generative AI, high-capacity SSDs are becoming increasingly vital as the foundational infrastructure for delivering high deployment density and high throughput. Building on these developments, next-generation AI systems will achieve comprehensive system optimization by combining the externalization of KV cache via CMX framework, high-speed processing through NVIDIA Storage Next, and large-scale RAG that is independent of DRAM capacity, utilizing Kioxia Isaac. Ultimately, these new inference AI architectures are designed to resolve the structural challenges brought about by the evolution of AI, with SSDs positioned firmly at their core. From here, I would like to introduce our product portfolio designed to cover these new applications for SSDs. As I have outlined, the advancement of agentic AI is driving an exponential increase in both data access volumes and processing density within inference AI systems. Consequently, data transfer performance between the GPU storage, namely bandwidth, has become crucial. To utilize storage not merely as an auxiliary space, but as an integral part of the effective memory hierarchy, storage solutions with high throughput and low latency are absolutely essential. To meet these exacting requirements, we offer the CM series high bandwidth SSDs equipped with TLC flash memory. The CM series is fully compatible with CMX framework and is specifically architected to optimize KV cache applications. Incorporating our most advanced NAND flash memory allows it to achieve even greater capacities than previous generations, and to efficiently retain and utilize the massive amounts of data generated during the prolonged multi-stage inferences characteristic of agentic AI. Furthermore, the adoption of our in-house development SoC solution delivers superior power efficiency, directly contributing to the optimization of overall power consumption in data centers. In addition, its support for the latest PCIe generation and compliance with cutting-edge standards such as NVMe and OCP ensures seamless integration into advanced AI infrastructures. Crucially, the CM series is also compatible with liquid cooling systems, which are increasingly being adopted in AI environments. This enables the drives to deliver stable, high performance, even in high-density deployments involving equipment with significant heat generation, such as AI servers. In summary, the CM series is a core component that underpins the high-bandwidth data transfer essential for next-generation inference AI systems. On the other hand, the proliferation of agentic AI, characterized by a dramatic increase in the number of iterative inferences, generates extremely granular and high-frequent data access. In this domain, further improvements in latency and I/O performance are critical. To address this, we are undertaking a performance innovation through a novel architecture that transcends conventional SSD technology. Meeting these exacting needs is the GP series, a high-performance SSD powered by XL Flash. The GP series is engineered specifically for direct integration with GPUs, fully supporting NVIDIA Storage Next initiative, a framework designed to seamlessly extend GPU accessible memory. By combining our proprietary XL Flash with a custom SoC capable of handling data access at an incredibly fine 512-byte granularity, we have achieved a major breakthrough. This combination delivers both exceptionally low latency and the high IOPS performance required by next-generation AI systems, which requires IOPS of 100 million or more. Crucially, this performance enables the SSD to function as an effective extension in complement to HBM. By mitigating memory capacity constraints, we are paving the way for an entirely new AI system architecture. Ultimately, the GP series is the core product driving the low latency, high IOPS data access essential for the future of inference AI systems. Furthermore, the advancement of agentic AI presents another challenge that cannot be ignored: the explosive growth in data volumes. As inference processes become more multi-staged and prolonged, and the volume of generated data itself increases exponentially, there is a growing requirement for the overall system to efficiently store far larger amounts of data. Addressing the specific needs is the LC series, our high-capacity SSD equipped with QLC flash memory. The LC series utilizes the 2 TB QLC of our 8th generation BiCS flash. Leveraging highly advanced packaging technology, we successfully stack 32 memory chips within a single compact package. This enables an industry-leading capacity of 245 terabytes within the standard E3L form factor. We have now commenced mass production shipments of this product, and it is already being deployed in ultra-high capacity servers. This remarkable increase in data density allows for significant storage expansion within limited physical space, directly helping to improve efficiency across the entire data center and to optimize the total cost of ownership. Moreover, it serves as an ideal foundation infrastructure to cost-effectively store the expanding massive data sets and cold data typical of inference AI systems. In short, the LC series provides foundational storage capacity required to support the continued scaling of AI infrastructure. As Mr. Yaguchi explained earlier, we are already witnessing a tangible expansion in demand within the flash memory market, driven primarily by inference AI systems. In particular, inference AI systems designed for agentic AI architectures handle an exponentially growing volume of data, including KV caches, RAG vector data, and inference histories. To address this rapidly evolving and expanding market, we offer a comprehensive portfolio: the CM series for high bandwidth data transfer, the GP series for ultra-low latency and high IOPS performance, and the LC series for ultra-high capacity data storage. Through this strategic alignment, we are actively driving the enhancement of performance and scalability in inference AI systems. With the continuous advancements of AI systems, storage has evolved from a simple data repository into a critical component that dictates the performance of the entire system. Moving forward, in addition to developing cutting-edge NAND flash memory and SSD technologies, we are strengthening our total solutions capabilities, including the seamless integration of storage and memory. Through these initiatives, we will reinforce our competitive edge in the next-generation AI infrastructure market and drive our mid to long-term growth. That would be all from me. Thank you very much for your attention.
I am Atsushi Inoue, head of our memory business unit. I'd like to outline our BiCS development strategy for the AI era, focusing specifically on the latest developments of our 10th generation BiCS. Here is the agenda for today's presentation. First, I will discuss our NAND development strategy in response to the evolution of AI inference systems. Next, I will highlight the technological leadership of our cutting-edge 10th generation BiCS. Finally, I will provide an update on the progress of our development of that 10th generation. I will start by focusing on our memory development strategy. As noted in the earlier session on the SSD business strategy, the evolution of generative AI is diversifying customer requirements for both SSDs and NAND flash memory. To address the rapidly expanding inference market, we are advancing our product development with a focus on 3 core areas. First is addressing the need for greater efficiency in inference processing. For the context memory storage shown on the left, KV cache, which stores previous calculation results, must be swapped with HBM at high speeds. This requires high bandwidth read and write performance. In this domain, TLC NAND is the optimal solution. Second is meeting the demand for improved response accuracy. Processes such as vector database generation on RAG servers shown in the center right of the slide demand low latency and exceptional random read performance. Here, SLC or MLC-based XL flash is the optimal solution. Positioned as an HBM extension, this technology will be deployed in our super high-performance GP series SSDs, which deliver exceptional IOPS. Third is managing the explosive volume of data generated by AI. We are driving the development of high-capacity QLC NAND tailored for high-capacity SSDs. These serve as a primary storage medium for the exponential surge of data generated by RAG server database queries and agentic AI. The common requirement across all 3 of these approaches is performance per watt, in other words, power efficiency. In the data infrastructure of the AI era, achieving low power consumption to boost power efficiency is of paramount importance. As we develop BiCS, our 3D flash memory, our primary focus is to deliver high capacity, high performance, and high power efficiency or low power consumption. This builds upon the foundational value of cost competitiveness that the market has historically demanded. Next, I will outline our path to achieving this high capacity and high performance guided by our BiCS Flash roadmap. Our 8th generation BiCS Flash serves as a starting point for our future product development roadmap. A defining feature of the 8th generation is its adoption of CBA technology. This optimizes thermal processing by separately manufacturing the memory cell wafer and the CMOS circuit wafer before bonding them together. By enabling industry-leading performance, capacity, and power efficiency, this technology has earned exceptionally high praise from our customers. We are currently scaling up mass production for numerous projects, and by the end of fiscal year 2026, we plan to transition approximately 80% of Kioxia's annual gigabyte outputs to this 8th generation. Additionally, with the 8th generation, we became the first in the industry to establish the technology that allows 32 dies to be stacked within a single package. This breakthrough has enabled us to achieve a massive 8 terabyte capacity in a single small form factor BGA package. This high-density packaging is key to delivering our 245 terabyte LC9 SSD for the generative AI market. Building upon this 8th generation foundation, and to address the diverse needs of the AI era, last year we introduced a dual axis strategy for our product development. The first axis of development, shown extending to the upper right of the graph, is a pursuit of high capacity and high density. For our 10th generation BiCS Flash and the subsequent 11th generation, we will continue to combine increased vertical stacking with lateral scaling. This will deliver high bit density and massive capacity products tailored primarily for the enterprise and data center SSD markets. The second axis of the development is the pursuit of high performance. For our 9th generation BiCS Flash and the subsequent generation Y, we will combine cell technology featuring an optimized layer count with the latest CMOS technology to achieve exceptional performance. This will primarily target the needs of the AI-enabled PC and mobile device markets. Today, within this dual-axis strategy, I will focus specifically on our 10th generation BiCS Flash. This latest development is primarily targeted at the next generation AI inference market. Over the next 2 slides, I will explain the technological leadership of our 10th generation BiCS Flash. First, this section addresses the relationship between layer count, cost per gigabyte, reliability, and power efficiency. As illustrated in the diagram on the left, conventional 3D flash memory has traditionally relied on increasing the vertical layer count to enhance bit density and achieve cost reductions. However, excessive stacking requires substantial capital expenditures and additional manufacturing steps, which ultimately increases wafer costs. For the 10th generation, as with the 8th generation, cost reduction is not pursued solely through increased vertical stacking. By incorporating lateral scaling technology in a well-balanced manner, the gigabyte cost has been optimized with a lower layer count than the industry average. Furthermore, excessive vertical stacking introduces 2 performance-related concerns. The first is the degradation of power efficiency, and the second is the decrease in reliability. As shown in the structure on the left, with extreme stacking of 400 layers or more, the number of memory layers activated during data read and write operations is higher than a 332-layer architecture, which tends to increase power consumption. The second concern involves the reliability of the memory cells. To stack 400 or more layers, the individual memory layers must be made thinner. This reduces the electrical charge that each cell can retain, thereby degrading memory cell reliability. For the 10th generation, selecting the optimized 332-layer architecture has successfully improved power efficiency and secured memory cell reliability. The table on the bottom right compares our 332-layer 10th generation product with a case where a product is developed with 400 layers or more. By limiting the layer count to 332, estimates show that the gigabyte cost is approximately 10% lower. Additionally, it achieves a 10% advantage in power efficiency and a 35% advantage in memory cell reliability. In conclusion, rather than simply pursuing a higher layer count, the 332-layer 10th generation BiCS has been optimized from multiple perspectives, including gigabyte cost, memory cell reliability, and power efficiency. Consequently, this architecture has produced a highly competitive product in the market. The second technological leadership is the CMOS directly bonded to array, or CBA technology. By inheriting the CBA technology, which was introduced early in the 8th generation, and applying it to the 10th generation, we're able to maintain our industry-wide advantage in interface performance, a key performance indicator following the success of the 8th generation. As shown in the diagram on the left, CBA technology was introduced beginning with the 8th generation BiCS, representing a market launch approximately 4 years ahead of the industry average. Consequently, an interface performance of 3.6 gigabps was achieved 2 years ahead of the rest of the industry. Similarly, an interface performance of 4.8 gigabps is expected to be achieved approximately 1 year ahead of the industry by implementing it in the 9th and 10th generations. Our deployment of high-speed interface products from an early stage effectively differentiates our product portfolio. As illustrated in the diagram on the right, by 2029, the proportion of our products supporting 4.8 gigabps within our product mix is projected to be approximately 20% higher than the industry average. This will enable us to precisely address the requirements of growth markets, such as high-performance SSDs supporting PCIe Gen 6 and Gen 7 that demand high bandwidth for future generative AI markets, as well as high-speed mobile applications. Finally, I'd like to update you on the current development status of our 10th generation BiCS. Development of the 10th generation BiCS 1 terabit TLC product is progressing smoothly. We are currently conducting reliability testing, the final phase of development, and are targeting to commence sample shipments this summer. As shown in the table on the left, we've confirmed steady performance improvements across key metrics compared to our 8th generation products. Specifically, bit density has improved by 59%, interface speed by 33%, data read throughput by over 15%, and write throughput by over 30%. Furthermore, regarding power efficiency, which we projected to improve by 10% at last year's corporate strategy meeting, we've achieved substantial gains, surpassing a 40% improvement in read operations and a 30% improvement in write operations. The 10th generation 1 terabit TLC BiCS will be deployed in high-performance, high-bandwidth SSD products, including Kioxia's next-generation CM series SSDs. With this highly competitive NAND product that will support the ongoing evolution of AI, Kioxia is positioned to precisely meet the demands of the market. That concludes my section. Thank you.
Hello, my name is Kawamura. I am the Executive Vice President and Executive Officer. In the end, I would like to talk about our financial strategy to support our growth. Please take a look at the agenda. I would like to talk about the 5 themes. First is further enhancement of our profit-generating capabilities. I would like to talk about the quality of profit. The second is the structural business transformation. I would like to talk about our growth curve moving upwards significantly. And next, I would like to talk about achieving best-in-class capital efficiency. And the fourth point is maximizing cash generation and strengthening financial position. We have been able to significantly improve the balance sheet. The balance sheet has been significantly reinforced. And last but not least, I would like to talk about the capital allocation. And related to that, I would like to talk about our thoughts around shareholder return. Please move on to the next page. I would like to talk about how we plan to elevate our quality of profit. Mr. Oto, Yokotsuka, and Mr. Inoue have already talked about this, but in summary, the demand for data center will be captured. We want to make sure that we transition to a structurally stable revenue model. And to further reinforce our activities around this, we would like to invest on CapEx, R&D, and human capital investments to further elevate the quality of our earnings. High growth, high margin means we are going to be able to generate profit through our technology. We are able to capture new customers and new markets. And so the earnings from that, we define as high quality earnings, and this ties to high profit. To be more specific, I would like to talk about the 3 points. Starting from the left, market, technological leadership, and cost competitiveness. In the red font on the bottom, for the market, there has been a change in our portfolio and the technology leadership. We would like to further advance our R&D activities. And for cost competitiveness, we have migration. We basically want to shift our resource to the new generation. Starting from the left, our data center products are expanding. So the conventional smartphones and computers were the traditional part of our business, but we are moving to a more focused sector, which is industrial and enterprise customers. Through long-term agreements with our customers, we have been able to stabilize our income. The investment decisions have become more accurate due to this, and the portfolio mix has changed due to this. The revenue contribution rate for data centers is expected to exceed 60% by FY28. If you can take a look at the middle of the slide, technology leadership. We are focusing on technology leadership for R&D activities. Against FY25, we would like to achieve over 60%. We plan to focus our investment on advanced technology. So we would like to deliver high value-added products, super high IOPS SSD for AI systems, and we also want to expand high-capacity QLC and high-performance products, which are 4.8 gigabps. Moving to cost competitiveness, we want to accelerate our migration to next-generation products. The ratio of BiCS Flash Generation 8 will exceed 80% by the end of FY26. This is the target that we have set for FY26. On the next slide, I would like to talk about the structural business transformation. Starting from the left, in pink, we have our trajectory of revenue from FY19 to 25. The line chart would show our non-GAAP operating margin. If you can take a look at this table, you can see that the pink bar has become larger when we compare left to right. And we also see a big curve in the line graph. And in the right side, you can see the blue bar chart as well as the arrows. This blue bar would be multiplying the Q1 guidance of FY26 by 4. So the revenue size has significantly increased. And if you can look at the dotted line on the right, the memory business will continue, and so there will be a cyclicality, but the volatility has been reduced. The growth curve has already been elevated towards the top of the chart, and there will be cyclicality, but you can see that the arrow is moving towards the upper right. And so we can assume that we may be entering into a super cycle. But even so, there are 4 drivers that we can think of. One is the market. We are shifting from consumer-driven cyclicality to AI infrastructure-led stable growth. So we will be able to shift to a more stable structure. For the business model, we are shifting from a single-year LTA to multi-year LTA, which will enable revenue visibility and stability. For technology leadership, the NAND technology that we have pioneered will be maintained. CBA, CMOS, bonded RA will enable us to have a technological advantage, and we also will be launching high value-added SSD products so that we can maintain to be the market leader. Cost and capital efficiency will also be reinforced. While we maintain industry-leading cost and capital efficiency through technology advantages and operational scale. Please move to the next slide. We are working to achieve best-in-class capital efficiency. We have a very strict investment criteria, and we will structurally shift to a high ROIC model. Return on invested capital. The capital cost average will exceed with return. Please take a look at the bottom of the slide. The ROIC for FY24 was 18%. This was raised to 31% in FY25. When we look at the first quarter of FY26, we are currently expecting to be over 60%. If you can take a look at the bottom, we have the weighted average cost of capital, WACC. It's about 10% or maybe in the teens. And we will add our investment hurdle rate on top of this, ROIC and WACC. In between the two, we call it the spread. And it's really about how we can elevate this level, and you can see our efforts. If you can take a look at the right side, we are targeting to be the best-in-class ROIC. We will concentrate on R&D and human capital investments in high-growth, high-margin sectors to further elevate a higher ROE. And for investment discipline, the hurdle rate will be controlled sufficiently, and we will only fund projects that exceed the hurdle rate. And through our efforts around this, we want to achieve a significant improvement in both EPS and free cash flow per share. Moving to the next slide. This is the slide that talks about maximizing cash generation and strengthening financial position. In the caption, you can see that we are working to achieve both the financial soundness while we invest for future growth. These are contradictory to each other, but we want to achieve both so that we can further elevate corporate value. If you can take a look at the left, we have our assets, and the right would show our liabilities and equity. When we take a look at the assets on the left, you can see there are two bars. The left would be FY25, and the right is the illustrative FY26 trajectory based on Q1 run rate. For FY25, the total asset was 3.690 trillion yen, and this is going to double by the end of the fiscal year. We haven't been able to quantify the actual figures yet, but we believe that the total asset is going to be almost double of what it is and what is actually going to increase. If you can take a look at the comparison, cash will increase. So liquidity for future capex and R&D will increase. So this will further make our financial position sound. BIX 8 and BIX 10. We will be investing on these two technologies, and this would double our asset. And moving to the right, liabilities and equity. For FY25, we were at 3.69 trillion yen in liabilities and equity. And if you could take a look at the right, you can see that there's a substantial increase, especially in the blue bar. This would be our equity ratio. FY25 was 38%, and this is going to go to the late 50%, close to 60%. So our financial position will be very sound, and so we can make proactive investments. Lastly, I would like to talk about our capital allocation policy and our thoughts around shareholder return. We're still in the middle of the fiscal year, and so how much cash flow will be generated in the end cannot be quantified, and so I would like to share our thoughts. Starting with our thought, we want to allocate based on cash flow. And we have the blue box in the middle. This is the excess cumulative free cash flow. There are cash generated, and as you can see in the caveat on the bottom, there is investment already made in 4 areas. One is capex. The second would be R&D and human capital investment. And the fourth would be a reserve for operational needs. So all of these costs have already been dispersed. And with that excluded, we have the excess cumulative free cash flow, and we will return based on this. Taking a look at the pink part, our key policy for shareholder return, it will be dividend-based, and we plan to start a progressive dividend. The timing, as I mentioned earlier, we haven't been able to fix this year's figures yet, and so we can't give you any specific figures or percentage as well as the timing. But according to our current plan, based on the FY26 actual, we will start paying dividends from FY27 according to what we're examining today. But depending on the cash flow situation, we may examine the opportunity of a dividend in the second half of FY26. If, for example, the shareholder return were to be 50% of the net cash flow, about 50% of that would be shareholder return. So that's the basic dividend. And if there is excess income, then there will be special dividend. And according to the situation of the share price, a share buyback will be examined. So the 50% will be shareholder return, and for the remaining 50%, it would be growth investments such as M&As. And in some cases, the M&A may not happen, And so out of the net free cash flow, 100% of that can be returned to shareholders, depending on the scenario. And so those are all the options that we will be examining as we decide on our shareholder return. That's it with my explanation. Thank you very much for your attention.